Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm your host, Tshepo Modiba, and thanks for joining me. Today, we turn our attention to the Democratic Republic of Congo, in particular, the mining and infrastructure in the country. Joining me to do just this is Afriwise Consult Director, Olivier Binyingo. Olivier, on the face of it, the DRC should be probably one of the wealthiest countries in the world, talking resources from industrial metals across to energy, uranium, coal. So on the face of it, mining should be a sector that thrives. Has that been the case?
Well, it has been the case more recently, you could say. It has been picking up seriously over the past few years after obviously very difficult years around the turn of the century with the armed conflict and then the peace process. Last year and this year we're sitting close to 1 million tons of copper export. And if you see where the country is coming from, let's say 10 years ago, close to the turn of the century, I think there has been significant progress made, but still not in line with the potential, as you rightly point out.
Sure. And what's changed? What's been the positive in terms of investments that actually spark this turnaround in terms of the sector?
Well, obviously, for investment to pick up, one of the important factors is that you have peace.
Right.
That you have people that can come into the country, and especially in the mining space, your resource is very much linked to a specific geographical location. You can't just displace it. So getting peace and getting even though there's still some armed conflicts in the eastern parts of the DRC, but nothing compared to what it was around the turn of the century, where the country was de facto divided in three separate blocks governed by two rebel movements, and then at the time the government. So I think the fact of reinstalling a central government and reinstalling governance across the entirety of the country, bar some further conflicts in eastern Congo, that has probably been the key factor in attracting investment and in being able to get the type of production we've been seeing more recently.
And the production, has that really been driven by foreign investors coming into the country, or an element or a mixture of both local production and foreign investors or foreign multinationals coming in and doing the extraction?
Well, typically in the mining sector, it's pretty much driven by foreign investment, considering the amounts you need to get a mining project off the ground.
Right.
Well, amounts financially, but also expertise you need to get a mining project off the ground. So the sizable operations are all coming from foreign investment.
And what does that mean from a benefit specifically for the DRC? I guess the big drivers in terms of demand politically going forward will be that the local communities benefit, or the DRC as a whole benefits from this extraction from minerals. So what does that mean from a benefit perspective?
Well, obviously that is, and it's not only in the DRC. I think it's an Africa-wide trend, and probably beyond that. That local communities tend not to benefit enough from the resources that get extracted from the country. Specifically to the DRC, I think in 2002, which is the year of the current mining code in the DRC, in 2002 the focus was really on attracting investment in the mining sector, and it was really it is really an investor-friendly mining code that was put in place in 2002. The last few years, there has been this increasing call for more benefits on the one hand for the state, on the other hand for the local communities, and that has been one of the drivers behind the revision of the mining code, which was initiated, if I'm not mistaken, in 2011. Right. And the Minister of Mines a few weeks ago at the Mining Indaba announced that we are now in the final phases of getting this mining code approved. Even though there are still some issues to be ironed out between the government on the one hand and the private sector on the other hand.
So what does that potentially mean for private sector investors? Is that alarm bells? I know investors typically, when there's change, we get a little nervous. What does that mean potentially?
Well, potentially, obviously, it's not over as long as there's no act adopted by Parliament and ratified by the President. But it looks like the trend will be indeed an increase of taxes and royalties. And I think even though the rates might have changed from the initial drafts, I think that will be a fact. I think there will be increases. The big question will be whether these increases will affect the existing projects or will only kick in for new projects that will be developed. I think that's one development around taxation. The other development will be around local content, and local content as much in the sense of pushing local employment and transforming the environment and transmitting skills to local employees. And also trying to boost the SMEs or other companies that feed off the mining industry,
right.
And that today are still very often foreign companies. So I think that the two big trends will be taxation and local content in different forms. And then a question mark remains around state participation, which is today in the mining phase of the project. There's a required 5% free carry of the Congolese state. Previous drafts of this new mining code would bring that percentage to 35, which is quite a significant increase. Yeah. So it is to be seen how much, what type of percentage will be in the final version of this act.
Okay. Now, if we link, I guess, the second part of our discussion, which is infrastructure, the two are almost interlinked. How has the infrastructure challenges limited the potential for the sector, or is this an area where we're seeing an increasing improvement?
Well, again, I think it's a nuanced story. Obviously, there is, and if we say infrastructure, I think there's two important types of infrastructure that are key to mining. One is roads, rails, basically your infrastructure.
Because you have to get the stuff out, right?
Correct, to get the products out of the country. There are quite some projects that are in the pipeline. They are unfortunately not moving as quickly as people, as investors would like to. For example, today, getting the product out of the Katanga province, which is the most mineral, or at least the most explored province of the DRC, and therefore the copper-rich province. Yep. Getting the product out via road is basically very dependent on one road going into Zambia and then to the different ports of the African continent. So there's different road projects that are in the pipeline that would provide alternatives to this road through Kasumbalesa into Zambia. There's rail infrastructure, a project that I've been involved in a few years ago, and that was stalled and now might come on stream again, being the rail link to Angola from the Katanga province again in the DRC through Angola and to the Lobito port, where the portion on the Angolan side has been finalized, but there's still quite some work to be done on the DRC side. So that's, I think, infrastructure in terms of getting the product out.
Right.
Another type of infrastructure that's key is obviously electricity. And there, I think it was last year or the year before, I'm not sure, the Prime Minister basically asked the mining companies to halt expansion plans because there was just not enough electricity being generated in the DRC to supply the mining sector. Just to give you an indication of how little there is being produced, the installed capacity in the DRC is today below 3,000 megawatt, with South Africa being slightly above 40,000, if I'm not mistaken. Yep. So that is clearly a significant problem for the mining sector. There again, there's projects that are in the pipeline. Inga being the most famous one, and Inga having a hydro capacity of about 45,000 megawatt, if the project happens. It's something that has been looked at for quite a long time, and now with South Africa getting involved on the offtake side, guaranteeing offtake and making this project maybe more bankable, people tend to be a bit more optimistic. But it remains a very complex and huge project. First Inga 3 would be around a bit less than 5,000 megawatt, but then the Grand Inga being about 45,000 megawatts.
Is this an area that is potentially exciting for investors? Are companies really looking at the DRC and saying, actually, in spite of the challenges, this is an area where we could earn serious returns?
Well, I think it is definitely. It's not an all negative story. We speak about the challenges because they're relevant to doing a project in the DRC as in other countries. But you indicated it at the very beginning. The mineral wealth is there, and investment decisions are in the first place driven by that mineral wealth that is present. So it's the resource that is the key driver of an investment decision. All the other factors, the challenges, will come in a second phase, where you now try to see how to make this investment dream to transform it into reality. And that's where a company like Afriwise, the consultants that we also come in. We come in looking at the challenges that are there from a business climate perspective, from a legal perspective, from a cultural perspective, also interactions with your communities and so forth. But that is almost after the decision has been made that the resource is worth pursuing and is worth getting out of the ground.
Okay. And then I guess finally to touch on all of these challenges probably means that, and you touched on it earlier, probably more capital intensive to generate these returns than it would be in more developed markets.
Well, to some extent, I think it's really you need to assess that project per project.
Right.
For example, if you look at the Kibali project in the DRC, but closer to the Ugandan border, so not in the Katanga province, which is the mining province, so to speak. So Kibali is a gold project in a very difficult area, and basically the Kibali project as such has transformed that area and has made it a bit more accessible for other businesses also now to develop. So without knowing the cost of investment of that project specifically, you can imagine that setting up a project in such an untouched terrain is more expensive than doing the same in parts of the Katanga province that has been a bit more developed, because there was more activity. There was already more activity that was present. So obviously the cost is an important factor, but as long as the returns are acceptable to investors, the investments will take place. The business climate, the political climate, and so forth might sometimes delay projects to happen or to come on stream, but they will not permanently delay projects.
Perfect. Let's leave it there. Thank you, Olivier. Thanks to my guest, Olivier Binyingo, Director at Afriwise Consult. That's all from Buy Africa this week. Remember to follow me on Twitter, that's @Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. For myself and the team, goodbye.